including full-year profitability and cost.
Watching BloombergQuint at Davos, the World Economic Forum's annual meeting, the 50th one this is, and I'm joined by a guest who's been a regular here for many years and a regular here on BloombergQuint, Dr. Fatih Birol, Executive Director of the IEA. Dr. Birol, thank you very much for joining us. Let me start by asking you about the outlook for the year before I get to the decade. We've had an interesting last few months. We've seen a spike in crude oil prices and then a settling down. The US-Iran trade tensions, the US-China phase one deal. How are you gauging both demand and supply and therefore pricing through the course of this year?
In fact, we met, as you said, last year again here. And when I look at the last year Davos and this year Davos, throughout the 1 year, we have seen oil prices around $65. Didn't change much, despite the Venezuela is lost.
Yes.
Iran is lost as an exporter. There was attack on Saudi Arabia, and we have seen the recent killing of the Iranian general in Iraq, and we see in Libya there is unrest now.
Yes.
Despite all of these things, oil prices remain around $65. If only one of those incidents would have happened in the past, we would have seen oil prices going up substantially. And why it is so stable? Because there is a lot of oil in the market. There's abundance of oil coming from US, Brazil, Norway, Guyana, Canada, lots of oil. So it is the reason we are seeing a more comfortable market now, and these incidents are somehow considered tolerated within the current oil market context. Having said that, I have one major worry when we look at the oil markets, which is Iraq. Iraq is today the second largest oil producer in OPEC, and we know that the recent political developments around and in Iraq are rather discomforting. If any incident happens in Iraq, and if the stability of the country is put into question, and if as a result of if the oil markets see a disruption of Iraqi oil, this could have serious implications for oil markets and oil security.
Dr. Birol, you made the point that non-OPEC supplies have in fact been increasing, like you said, from Norway, Brazil, Canada, Australia, Guyana. Yeah. Will this help compensate for any shortfall or production cutbacks in OPEC? Because we've seen that the OPEC has preferred to keep prices at a certain level in and around between $50 to $60, especially now that we have Saudi Aramco listed. I'm sure the pricing of oil becomes even that much more critical to a large player like Saudi Arabia. So how do you see the non-OPEC supply situation playing out, and you expect it to stay or help keep prices around 60 for the course of the year?
First of all, a structural change is happening in the oil markets. The share of OPEC plus, OPEC, Russia and the others, is sliding down significantly. Right. So it was about 55% of the global oil production. It is going down to 45%. Therefore, the ability of those countries determine the market conditions, prices are also being more and more limited going down. This is number one. Number two, looking at the numbers, we expect, despite the OPEC cuts, if it is fully implemented, those cuts that the OPEC plus others have agreed recently in Vienna, even if it is implemented, we expect there will be still 1 million barrels per day of oil surplus in the markets, which could play a cushion role if an incident happens. But of course, this will depend on the nature of the incident. For example, this Libya, hundreds of thousands of barrels have been lost from one day to another, but it could have been tolerated within the current market context. But if such a bigger incident happens, such as the one I am rather afraid of, such as the Iraq, then this could have other implications.
I understand the share of U.S. oil is also falling?
No, U.S. oil is still growing, but the growth is slowing down. It is still growing, but it's slowing down.
Is demand a fear for you or a concern area for you this year, given that we've had, yet another IMF minor downgrade in terms of growth outlook for the global economy? Do you think that, it is these slightly tepid demand conditions that will help, balance out any kind of supply shock and keep prices at in and around $60?
Yes, that's true. We expect that this year global oil demand will be around 1 million barrels per day of increase. Compared to previous years, historical averages, it is rather on the low side, mainly as a result of slower economic growth coming from the emerging countries. China, the driver of the global oil demand growth, experiencing the lowest economic growth in the last 3 decades. Therefore, oil demand growth will be about 1 million barrels per day. Still decent, but lower than historical averages.
You said something in a recent interview that I want to touch upon, before I get to a quick question on India, and that is, you said the oil industry faces twin threats of financial profitability and social acceptability. And I know these comments were made in the backdrop of all the conversations around climate change. Can you give us a sense of what you expect this year and this decade will bring in terms of changes to the oil industry?
The oil and gas industry needs to balance their short-term profits and the long-term social acceptance issue. And climate change issue is here, and it will be with us many, many years to come. It is a very important, serious issue. We can only hear more and more about climate change, and it is at the heart of the debate in Davos, and energy is at the heart of the climate change debate anyways. No oil and gas company will be left unaffected from the climate change debate. In my view, they can well be a part of the solution.
How?
Because they can do 2 things. First, from how they produce oil and gas, they emit significant amount of emissions. They can reduce them. Second, these companies have huge experience in the large-scale engineering projects. They have huge capital deep pockets, and they can invest in clean energy technologies, and they can enable those technologies, which are difficult to push through the markets. They can be a part of the solution. So we will see. I am going to discuss with the business leaders in the next 3 or 4 days, and I hope that they will prefer to be the part of the solution, and I hope they will find a way, on one hand, having a profitable business, but on the other hand, contributing to the fight against climate change.
Okay, I have one final question, and that is, in a recent report you said that renewable energy generation will surpass coal by 2026. This is an IEA report. Can you tell us a little bit more about the implications of that, especially for a country like India, which is so highly dependent on coal and is looking to increase production of coal to be able to fuel its energy needs?
Yes. There are, of course, different trends in different countries.
Yes, of course.
For India, I see 2 important trends. One is that India is doing a marvelous job in terms of the renewables, both wind and solar. And a few years ago, India set a target for renewable energies, which is being considered by many impossible to reach, and India is reaching and going beyond that. This is one good news.
Slowly.
Slowly but surely,
yes.
I should say. There are very good steps in that direction. And but at the same time, in terms of coal, I see 2 trends. Big drop in Europe And in the United States, there's a big drop of using coal, but still coal is used in China, India, Indonesia, these two countries. And when it comes to renewables are growing across the world, especially solar and wind, because they are becoming cheaper. It is the main reason. So therefore, globally, we see renewables will overtake coal in the next few years to come.
Dr. Birol, it's always a pleasure speaking with you. Thank you so much for your time here in Davos.
Thank you very much. Thank you.